Tonight's Market Monitor joins us now to talk more about what Europe and China's central bank moves will mean for the U.S., as well as his stock picks. He's Erik Ristuben, Chief Investment Strategist with Russell Investments. Erik, good as always to have you here. Do you think what China is doing and what Mario Draghi proposes to do are the tonics that those two economies need to get them moving in the direction that the central banks seem to want them to?
Yeah, ultimately, yes, we think these are going to be successful moves. I mean, in China's case, they're obviously intentionally slowing their economy, but more specifically, they're trying to adjust the composition of their economy. They're trying to slow the investment part on housing, principally, while actually making sure that the other part of their economy, particularly the consumption part of the economy, grows. Lowering interest rates internally within the country help. Probably also help making their currency a little bit cheaper versus the yen. In Europe, Draghi is really continuing to communicate with maybe a little more urgency that he's worried that the inflation rate is too low. So he's talking about doing as much as he can, as fast as he can, to raise inflation and to raise inflationary expectations. This is in addition to the $1 trillion almost of euro stimulus that he's already started to put in the system in this summer and the fall. We think ultimately those will be successful in raising the inflation expectation and therefore the growth rate in Europe.
Is Draghi really walking the walk in addition to talking the talk? It sounds like there's a lot of wind-up and not as much pitch here.
Yeah, certainly. Yeah, he's been winding up for quite some time on this. Look, he's got a very difficult political process. He's got to effectively bring the Germans along. The Germans will point out there's a legality issue as it relates to full-blown quantitative easing, where the ECB would buy sovereign debt. He's trying to create the conditions so that the necessity to do QE is the mother of invention in terms of actually being able to get the Germans to implement it. If he needs to get there, I think he's actually going to be successful. It's not clear he's going to have to go to full-blown quantitative easing, however.
Let's move on to a couple of your stock picks. And I know that you see the U.S. as kind of, as Keith Jackson used to say, the bell cow of the global economy. Let's start with your reasoning behind financials. You like PNC, and your second one is also a financial. Why are you high on it and financials generally?
Yeah, well, financials, and specifically within financials, banks. Look, we think the U.S. economy is continuing to expand. We think employment is such, and the economic activity that we've seen in the improvement in employment and economic activity is going to continue to cause greater and greater loan demand. We're really basically looking at banks as kind of a fundamental play in terms of we think their earnings are going to be accretive because there's going to be more loan activity because of a better economy. And Citibank in particular is cheap.
And Citibank is your second choice there, and it is relatively low priced, but it's kind of low priced for a reason, isn't it, Erik?
Yeah, well, yeah, it has lots of reasons why its price historically has been low. Those reasons are beginning to fade into history, and really we think that actually their business, their ongoing operating business will be enough to drive value. PNC is one of those super regionals that's just been well positioned throughout the entire cycle. A little more expensive, but frankly, probably a safer bet in terms of future performance.
Let's move on to your third choice, which is Live People. I'm not familiar with it. Tell me about it.
Yeah, LivePerson it's actually an interactive client engagement. They sell software. So if you've ever been on a website and a little bubble comes up and says, "Do you need some help?" You haven't done anything in a while. Or, do you have a question for me? That's probably using the LivePerson software. We think they're well positioned within the segment. We like software in general, but particularly we like them because they're well positioned. The other thing is they're a potential takeover target, and finally, they should be able to benefit from what we think is going to be a continuation of increasing CapEx expenditures, and particularly in technology, and they're kind of in the sweet spot in our mind for that.
Erik, thank you so much. We appreciate you being with us. Have a great weekend.
You too.
Erik Ristuben with Russell Investments.